How will the Japan crisis and the Middle East political crisis affect the initially optimistic 2011 outlook for the gold price?
Well, in many respects, the Middle East crisis is a positive for gold. You know, the primary drivers of higher gold prices is the macroeconomy globally, the United States, Europe, and elsewhere. But overlaying that, there's obviously a non-economic component or a quasi-economic component, which is the crisis there in the Middle East, possible impact on oil, and consequently people taking a safe haven bet into gold. When it comes to Japan, I think the direct influence on the gold prices is probably not that dramatic, although there have been instances of some fairly positive buying of gold in Japan on the back of this, although at the same time there's also been some distressed selling of gold in Japan. So it's difficult to really tell what the overall impact will be from the Japanese perspective, but certainly the Middle East is playing very strongly into higher gold prices.
You also said that the global hedge book is reaching record lows now in 2011 after years of de-hedging. How will that affect the demand for gold?
Well, the important thing to realize is that since the de-hedging started really being a major feature of this market the last 10, 12 years, that has been a major contributor to the demand side. To close out your hedge, you have to buy gold. And we're now at a stage where there's very little capacity for that hedge book to be reduced at all. So it's going to be at best a neutral influence on the gold price moving forward. The real risk, of course, is that we see a return to substantial volumes of hedging, but I think that's very unlikely in the current market situation.
What can we expect from the gold price, going to the end of the year, and what are going to be the drivers that are going to drive this forward?
Well, we've already alluded to one of the drivers of higher gold prices. Geopolitical uncertainty is still a positive, and I think what's happening in the Middle East, who knows what would happen if Saudi Arabia started to see similar kinds of street protests. So the macroeconomic backdrop, of course, as I mentioned as well, is the key driver of gold prices going higher. Investment demand is still very robust. In a market environment of ultra-low negative real interest rates, you're going to see investors across the spectrum taking positions in gold, often for varying reasons, but the core theme to this is a degree of macroeconomic uncertainty that will keep people interested in gold, and we believe will drive prices well above the $1,500 level.
Bearing all of this in mind, with $1,600 per ounce, is it a conservative or an optimistic estimate?
I think for the calendar year, I think it's realistic. On the balance of probabilities, we obviously do scenario planning at GFMS. We look at what may happen. I mean, let's be clear about this. There are downside risks to gold as well as the risks of it going above 1,600. We feel that the kind of orderly run-up in gold that we've seen for the better part of the last 4 or 5 years, some run off at times, some rather enthusiastic moves on the upside. But we think in the main you'll see a steady rise in the gold price going forward. Of course, if there is a major macroeconomic shock, and have a look at what's happening in the United States at the moment with the debt crisis there, is there going to be a downgrading of the United States? Is there going to be a crisis of how they fund the government spending going forward? Well, if that were to be the case, and it does precipitate a major crisis in Washington, then $1,600 plus gold is very, very achievable.
Then just finally, does this mean at $1,600 per ounce, does this mean that the global economies have largely recovered from the 2008 global financial crisis?
No, it actually is exactly the opposite. What the gold price is sending a very clear message to policymakers around the world that people don't trust what's going on. They don't believe that central bank policy is credible enough, and they don't believe that the fiscal stance of a lot of the governments out there is credible enough. So it's actually sending a very clear message, in my view, that the market out there doesn't believe what they're hearing. And until such time that the governments of the world and the monetary authorities really take this problem by the scruff of the neck, take the pain now, we will see gold still signaling that there is an imbalance out there, or a range of imbalances that warrants higher gold prices.